Today I'm sitting down with Shanna Harrington. She is the operations manager for Treadstone Funding, one of the biggest boutique mortgage lenders in the Midwest. So Shanna, a mortgage program that I'm getting a lot of questions about recently is the Fannie Mae Family Opportunity Assist Program. Can you give us a quick overview? What is it? How does it work?
Sure, absolutely. It's actually this hidden gem that Fannie Mae and Freddie Mac both offer. And it is you can buy a primary residence for your parents who are not able to purchase on their own or a disabled child. So the difference is that when you normally go to buy a house for somebody else, you have to do it as an investment. It's going to require more money down, and it's also going to have property taxes that are going to be non-homestead. This allows you to do it with 5% down and get a property homestead exemption.
So the primary purpose is for you to purchase a home for a loved one. So do you have to live in the home, or is this a home that the loved one can live in independently?
Absolutely. They can live in it independently.
Oh, that's awesome. How does someone qualify? What are the qualification requirements for this family opportunity mortgage?
So when you go to do it, you're going to have to prove that your parents can't do it on their own or your disabled child. And all we need is a letter of explanation explaining the situation, and then you're going to credit qualify and income qualify on your own.
And where does that letter of explanation have to come from?
It's going to come from you.
What are the minimum down payment requirements for this program?
So it's going to be under a primary, so you're going to be 5% down. You can put more if you'd like, but the minimum is going to be 5% down.
What mortgage programs can this be used with?
It's going to be used under conventional financing.
I know credit's always a big question when it comes to qualifying for a mortgage. What are the minimum credit score requirements for this program?
So the cool thing is that you don't have to pull the parent's credit or the disabled child. It's only going to go underneath you. And the minimum credit score that's required by conventional financing is a 620 credit.
So how do I know if myself or my parents qualify for this mortgage?
You're going to qualify by reaching out to a loan officer who's going to look at your whole credit profile and your debt to income ratio. Your parents won't have to qualify on their own, and that's the key factor, is that they don't qualify. So we won't pull your parents' credit. We're not going to look at their income docs or anything like that. You're going to give us a letter of explanation saying that they don't qualify for it, and then we're going to take into consideration your credit and your debt to income ratio. So you're going to have to qualify with your own primary and this new one that they're purchasing.
So when it comes to showing that my parents can't qualify, what are the requirements for that? You mentioned a letter of explanation. Is that just something that I write up?
Absolutely. It's something that you write up and explain to us that they're on Social Security, they have no money for a down payment, and they can't qualify because their debt to income ratio is too high.
Once I purchase the home, are there any requirements on how long they have to live there? What happens if they pass away? What are the rules after the mortgage is signed?
So once the mortgage signed, you are required to move into the home within 60 days, which would be your parents or your disabled child. And technically, you're supposed to live there for a year, and then you can sell it or whatever the case may be. If they pass away, you still own the home, and you can then turn it into your investment or second home or whatever it is that you choose to do at that time.
Are there any downsides to the family opportunity mortgage?
There's not a lot of downsides, but the only thing that I would say is that the mortgage will be underneath your credit. So moving forward, that will be a debt that is associated with you and not your parents or your disabled child.
How will that affect someone qualifying for another home? So if I use this program to help purchase a home for my parent or loved one, and then next year I get married and I want to buy a house, how does that work?
It's going to be counted against you as a debt. So just like if you have a car loan and another car loan and a mortgage, all of those are going to be taken into consideration, and you'll have to be able to qualify with your current income and those debts.
Let's talk about alternatives. Are there any other programs that are similar to the family opportunity mortgage, or programs that let you do a version of the same thing?
So there really isn't anything that's similar to it where you could ever purchase a home as a primary residence. However, if your parents wanted to be on the mortgage and you wanted to help them out, they could buy a primary residence and have you be a non-occupying co-borrower. And what that is where we're going to use your income and your credit to help them qualify to purchase a new primary, but you won't actually be living in the property. You're going to be considered a non-occupant co-borrower.
Okay. What about college students? We get this question all the time. My kid's moving to a new college, and instead of paying lots of money in rent, I would love to buy a home that they could live in, rent it out to their friends. Are there any programs for that type of buying a home for a child situation?
Yeah. I mean, it's a great opportunity for you financially to buy a child a home while it's living in college, because you could rent it out to them and it's your investment. There isn't one that would fit underneath this per se, but if you wanted to help build your child's credit, you could then act as a non-occupying co-borrower with them. So they would go on the loan, live there as a primary resident, and then you could be a non-occupant co-borrower as well.
What would be the down payment requirements if you wanted to buy a home for a college student as a non-occupied co-borrower?
Right. So if they're buying it as a primary, then you can do it up to the 5% down payment. If you're going to buy it as an investment, then you're going to have at least 15% into it.
So with the family opportunity mortgage, I'm purchasing the home. a loved one or family member is living in the home, who's responsible for the mortgage payments?
You're the one that is going to be obligated on the note, so therefore you are responsible for it.
And then how does title work in that? Are both the occupants as well as the purchaser on the title, or is it one or the other?
That's going to be up to you on how you want to do that. Obviously, if your parents are living there as your primary residence, you're going to want to put them on title, but there is no obligation to do that. You are the person that is going on the home, so therefore only you are required to be on title.
What about debt obligations? If for some reason I'm not able to continue making payments on that home, is the person living in the home liable for anything?
No, not at that time, because they didn't sign any note or they didn't go on the mortgage.
Where can I find out more information about the Family Opportunity Mortgage and companies that participate?
So I would definitely recommend reaching out to Treadstone and one of their loan officers. Not a lot of people know about this program, and they're pretty versed in it. They're licensed in the Midwest, Florida, and California.